AIM-listed oil portfolio investment company Solar Oil has recently received approval to acquire up to 13% of the Kiliwani North gas project in Tanzania. Neil Ritson is the chairman. He joins us now. Neil, welcome.
Hi, good morning.
How important is this deal that's recently been announced?
I think it's very important in the context of what we're doing in Tanzania, which is the big discovery we made there a couple of years ago at Notoria with MNX, our partner, and we need to move that forward into appraisal. In order to fund that, MNX need to clear some debt off the balance sheet, and by selling us a share in Kiliwani, they can do that. And so it's good for us because we get into another project in a country which is really moving these days in terms of gas to the market. And we get revenue this year, which is good for our cash flow. But at the same time, we free up Notoria to be developed, which is the big prize for us.
Notoria is in the Ruvuma basin, isn't it? Which is in a different area, is that right?
It is. It's in a different basin. The Ruvuma is where most of the big offshore discoveries have been made in Tanzania by Anadarko, by BG, Orphea, and so on. And we're on the onshore portion of that. It's the same geology, but it's onshore. And we made one discovery so far, which we know to be commercial, but we need to appraise it before we can move that gas into the pipeline system.
Now that is with MNX, and of course also this most recent deal we've just been talking about at Kiliwani, that Kiliwani North is also with MNX. I think you've acquired, what, 6.5% of the licence, I believe, with an option to go to 13%.
Yeah, I mean, we intend to go to 13%, but we would like to see the terms of the gas sales agreement before we do that, and that's what the option gives us the right to opt into a further 6.5% after the gas sales agreement has been signed.
And talking to MNX recently, they're expecting this to go through in production, what, I think the back end of the first half, is that right?
Yeah, end of the first half of the year we would expect to be in production. The pipeline system, the main parts of it are already there, I believe 97–98% complete, and the tie-in from the well at Kiliwani is very short, and most of it is done. So, you know, it is now about the commercial arrangements to get that gas into the market in Dar es Salaam, and that's really the only step that we're waiting for, and then we'll exercise our option to become a 13% holder.
And how do shareholders get a return on this? What's the shareholder return plan?
This is very early return in a way, because we'll be in production within months of having expended the acquisition funds, and then we'll be drawing a revenue thereafter. The project is expected to be on plateau for a number of years, so we will see an early payback. It's different from, for example, exploration. In the case of Notoria in the Ruvuma license, we started investing there 4 years ago, and we're thinking maybe another 18 months, 2 years before we can get on production. So that's a lot longer to wait. Here, we've got in at just the right time. But it works for both parties. It works for MNX and it works for us as well to be in that position.
What is your expenditure then going to be at Notoria in the Ruvuma?
Notoria needs another well. We did the additional seismic that was required to define the field well enough to drill the appraisal well. That well needs to go down sometime this year. We were budgeting it at about $12 million US. Rig rates are probably falling at the moment. Well, actually, I know they're falling with the lower oil price environment. So hopefully we can get that well done for, say, $10 million. We have a 25% interest, and MNX have the balance in that. That's money that would be extremely well spent in moving it down the value chain. The pipeline to Dar es Salaam that we'd have to tie into is only 20 kilometres away from the well.
You also got an asset which is closer to home, in fact, I think in Surrey, isn't it? It's in the Weald here,
yeah.
Which is oil, which is different from the Tanzanian.
Yeah, it seems like a magic number again, 6.5%, but we have 6.5% in the Horse Hill discovery. I think last time you and I were speaking, it was a well to be drilled, or was being drilled, and we were successful in making a discovery of oil in the conventional Portland Purbekian reservoirs. And we also discovered that the Kimmeridge Shale, which is the regional source rock, is also mature. So that opens up some other possibilities for limestone plays within the Kimmeridge. So that's something we'll be following up on. In order to get on production, we need a test, a flow test, and that's being worked at the moment. We'll get a separate approval to do that and hopefully do it this year. We'll do it this year, and then if that is what we would expect it to be in terms of flow rates, we'll be able to define a development to be probably on production within 12 months. It's very simple to do that.
We've got some questions in from clients when we were talking about discussing things with you. They wrote in, where do you see Solo in 3 years' time? What's the long-term plan?
Solo, you described as a portfolio company. That's really what we're doing. We're building a portfolio of, I would envisage 10 to 12 active ventures at any one time. At the moment, depends exactly how you count ventures, but we're in West Africa, we're in East Africa in 2 places. We have an interest in Canada, which we've talked about previously, is struggling to move forward. And we're in the UK in a couple of ventures here. So we'll look to expand that. We'll continue to grow those. They'll be across the value chain from exploration into production. Hopefully more production as we go forward. If we can get Notoria on production, certainly in that 3-year time frame, we would see the company being funded to expand its portfolio. And we're not too concerned about geography. What we look for is a good operator and good assets, and we use their expertise.
You're very closely associated with Aminex in these 2 major projects, and these are almost company-dominating projects, aren't they, really? Is there any mileage, do you think, in making a closer tie between the 2, possibly a merger? Between Aminex and Solo?
Yeah, I don't envisage that. I think they are Tanzanian focused, and our main assets currently are. But our focus is to build a global portfolio of small active interests. So we're sort of a fund run by oil and gas people, but really it is a fund. And whether the rest of our portfolio in any way is valuable within Aminex, I doubt. But yeah, never say never, but it's not something that we're actively looking at.
Yeah. Do you look over your other shoulder to see what other companies might be looking at Solo as a possible takeover?
I think that's where Tanzania is, what people will look at, and they'll say, well, Aminex and Solo, both relatively small juniors, sitting on some very valuable gas acreage close to a market that's just really developing with the infrastructure. Maybe there's a target there. But so far that hasn't happened, and we just keep an open mind.
What do you say about the share price in respect to what you own in terms of licences and this portfolio that you've got here at the moment? I mean, it's a relatively small share price compared to what seems to be the assets that you've got under.
Yeah, I think what the market always waits for is proof of the concept. Oil and gas in the ground is one thing, flowing is something very different, and we'll start to see that this year with Kiliwani. Next year, hopefully with the Weald, with Horse Hill well, and the year after that, Notoria. So the value will come with the proof that we actually have made discoveries that can be flowed and successfully commercialised.
Just keep turning the wheel.
Yeah, it's a long game. The oil and gas business is not a quick win.
Neil, thanks so much indeed for updating us. That's Neil Ritson there, Chairman of Solo Oil.